Hi there, Louisa here. Today I wanted to do a screen share with you to go through how you can set up your bank accounts to run a little more smoothly. Sometimes I get through, back before I did this, I used to worry about how much to spend because I knew I needed to leave so much in the account because the water bill and the electric and all the council tax was still to come out, and I didn't want to spend that money before the costs came out because then they'd bounce and it would all fall apart, and it was just really stressful. So over the years I've been doing a lot of setting up and tweaking and making it all perfect. So now it runs really easily. When my salary comes in, I've got a direct debit to send it to the house account, and then it just runs itself. And I know where I stand all the time because I know where everything is. It's really good. So you need two bank accounts, one for your personal spending, which normally boils down to your food shopping, your car fuel, and your stuff, miscellaneous things just you buy here and there, clothes and haircuts and scarves and the little things here and there. So you need to have that, otherwise you need to live. The other bank account will be set up for all your direct debits for your monthly normal costs. So the homework I set for you in one of my other blogs, this is where this comes in now. So if you go to put in your mobile phone bill, go through your bank statements and say what comes out. If you can put in when it comes out, that just gives you a bit more clarity as well. But put in your mobile phone bills, your broadband, your TV license, your water, anything like that that comes out every month that's the same. And if you've got costs that you pay yourself, make them direct debits as well. So your water bill, you can pay it, ring them up and pay it, or do it online. But if you just make it a direct debit, everyone's happy and you know where you stand every month, and it just streamlines it all. So have this second bank account. It's really easy to do. Your bank will open another one. Make sure it's free, but they don't mind giving you another bank account. And set that up so that all your direct debits come out of that one house account, and then you know where you stand. You know that all your spending money's over here, and you can spend the lot if you want. That's there for you, and it doesn't matter. You're not going to bounce any direct debits. And then your house account can be over here, and then that just runs automatically. The payments go and you don't need to worry. So your salary, your income is up here. All numbers have been rounded up and down, so it's just for an example. And then from there, we'll take all of these expenses. Anything that's regular, we'll put in the house account. Now, there's a house saver here as well, so you need two savings accounts, one for your house and one for you. House savings are things that come up yearly, like car insurance if you do that yearly. I live out in the sticks in the middle of nowhere, so we have heating oil up here, so I had to have that twice a year, and I know that that's going to come up, and I've worked out how much it is a month. If I put so much aside, then when the time comes for me to need the oil, the money's there and I don't need to worry, and I don't need to suddenly have this bill out of nowhere that, oh my God, how am I going to pay that? Because it's in the house savings account. It's been paid over there by direct debit from my original account, and it's just, you don't have to worry. I do the same for breakdown insurance, car insurance. You can do it for car tax, but anything that you just big lumps, you know are coming, put it away. Then up here, we've got income, expenditures, and then what the total outgoing is. And then down here is the fun bit. So how much is left over? Once your expenditures have all come out, your weekly budget of £100 a week for food, once that's all gone, you should be left with £280 as far as this is concerned. So put that across to your personal savings account first. As soon as you're paid, when your salary comes in, you know that this money is needed for your house to run a month. This is needed to go away to be saved for the big chunks. This is what you'll need for spending stuff. And this is what you do not need. This should be your savings, your surplus. So if you put it in there first, You've paid yourself first. That is the key to everything. Don't wait till the end of the month to see if it's still there, because you know what? It won't be. It'll be gone every time. I guarantee it. So put it in there first and you're set. Even if that's just £10, like in other blogs I've said how 2 coffees a day can add up to about £100 a month. Tiny little things really add up fast. So same for savings. Put tiny bits in there and it'll just tick up, tick up, tick up. And then before you know it, you'll have an emergency fund. So if your washing machine breaks, you've got money there. You've got an emergency fund at last. And it's just breaking that savings, making it into a savings account, breaking that sort of little habit that you've started to think about saving, and it just makes such a big difference. So once your money comes in every month, make a direct debit to go for the money for this amount to go straight over to your house account. Then from there, transfer that over to your house saver account, and first, whatever's down here, whatever this number says, put it in your personal saver. And you started setting yourself up, and it all just runs itself and you don't have to worry so much, and it makes such a difference. Let me know how it goes. Comment below, subscribe to my channel. I've got loads more tips to come, but it really makes such a difference to everything. So let me know how it goes, please. I'm really excited for you. Take care.